JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 29th of January 2021. So yep, welcome everyone. Welcome to this last trading day of this month, guys, and last trading day of this week as well. So yeah, before we jump into the charts, as always, guys, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here on is, well, it's Nikkei. Let me just go back into my list. So yeah, Nikkei 225. Everything kind of worked out nicely here for the sellers. I mean, what I was talking about previously, that if we get a drop below this one of these upside lines here, then we'll go for a bit of a larger correction lower, and of course we've dropped below this 21-day EMA here as well, and yep, in a way, kind of now further declines are possible. However, don't get me wrong, we'll just continue observing the kind of the sentiment, the market sentiment overall, because here, for example, on the technical side from Nikkei, we see that it's currently finding, well, coincidentally or not, but finding very good very good support near this previous resistance level, which is marked by the highs, near the highs of the 4th and the 7th of January. And well, I mean, from here, basically, we'll take it. We'll see what he wants to do after. I mean, because if you've managed to capture this this drop here on this break here of this upside line here, drawn from the low of the 22nd of December, then yep, great news. I mean, you've managed to capture a good move here. However, now the big question here is, will this area, this hurdle, this 27,600 zone, will it continue providing support? Because again, will it be seen as an important area of support? I mean, well, let's see what's going to happen. In a way, looking at the cash indices right now, I mean, on major major indices, we can see that the prices are rebounding a little bit, and yep, I mean, we could see this one, Nikkei, for example, following suit as well, and kind of pushing maybe back a little bit here to the upside. So I can see in the chat room we have a few people saying good morning. So Klaus, good morning. Kirsten, good morning to you too. So yep, I hope you're having a wonderful start of the day. So coming back to the indices here, so the next one I wanted to pick up here on is Hong Kong's Hang Seng Index. However, this one, as you can see, is also drifting nicely to the downside. It's dropping below the 21-day EMA, and in a way, kind of everything's leaning a little bit more towards the downside. So again, similar story as with Nikkei, I will say that be very careful, because if suddenly, let's say today, we'll get a bit of a reversal in the European equities and the US equities later on, then maybe these will also follow suit. Let's say, for example, Hong Kong's Hang Seng and Nikkei will push maybe a little bit back to the upside on Monday, I would say. But for now, I mean, we're close to closing here on Hong Kong's Hang Seng Index. We still have about 50 something minutes left of trading here on HSI. But at the moment it seems that, well, I mean, we're probably going to stay here below this 21-day EMA. However, I mean, we still have an hour, well, roughly around 50 minutes left, so maybe we'll have this one reversing back to the upside. However, either way, guys, still the bearishness, the bears won this week, I believe so, because I doubt that in the next 50 minutes we'll see a huge spike here to the upside. So the bears took the reins this week. Let's see if they can keep it up going into next week. But of course, a lot will depend on today's trading activity in Europe and in the US. And now, jumping into one of the European indices, the German DAX here. So you can see that on yesterday it reversed back to the upside, and if we take a look at the cash index right now and where it's currently sitting at, we can see that the price is sitting near the 13,520 mark. So basically below the yesterday's close, but and actually below this hurdle as well. This is one of my levels, the 13,566 territory. So we're sitting somewhere around here right now. Again, this idea that I've mentioned to you guys yesterday, that in a way, even if it pushes higher still, I mean, if it struggles to overcome the 21-day EMA, then we could see another slide. So for now, in a way, if the index will remain below this 13,566 territory here, there is still a chance for this one to push lower. However, just to be a little bit more on the safe side, if you want to aim for some lower areas, well, I mean, wait for a drop below this 13,442 territory, roughly around here. It's one of the obstacles here, and you can see that yesterday, for example, we did have a drop lower. We didn't quite really reach this 100-day EMA that I was talking about, but well, maybe it could have a chance to do so today. But again, we need to see, for that we would need to see at least a drop below the 13,442 zone, and then we'll take it from there. Also, I mean, what you could keep an eye on here is, I mean, let me just probably draw this one. I mean, it's a bit of a tentative one, but nevertheless, guys, I mean, we could keep that on the chart for now. So the reason why I'm talking about this 100-day EMA is because it kind of coincides with this little tentative upside line right here, drawn from the low of the 11th of December. Now, again, it's a very tentative one. Don't get me wrong. I mean, it might ignore this this upside line overall, but the fact that it kind of coincides here with this 100-day EMA, that kind of puts a bit of interest on this upside line. So yeah, let's see how it's going to play out, because if we see a drop lower here, a test of this area, but the let's say the bears won't have enough strength to push the index further south, then well, we could see something like this happening. So yeah, be careful and keep this in mind. So, long story short, basically, once again, to recap on this one, then if we see a drop somewhere below this 13,442 territory, yes, I'll start looking at some lower areas again, but only up until this 100-day EMA, and which also kind of coincides with this little short-term tentative upside line drawn from the low of the 11th of December. And then we'll take it from there. If we get a nice rebound, yep, great news for the buyers. If we don't, yep, further declines could be possible. But still, all this moved lower could be considered as a temporary correction, because don't forget that we're still trading above this upside support line drawn from the low of the 19th of March. Now, jumping into FTSE 100 very quickly. So here you can see that the index did have an attempt yesterday to test this other short-term tentative upside line here, drawn from the low of the 1st of December, but kind of failed to do so. It did reach the 64 level that I kept talking about this whole week. Now, by the way, if we take a look at the price action right now on the cash index, we can see that the price is currently balancing near the 64-62 territory, so basically slightly below this hurdle right here. So in a way, again, similar story as with DAX. In a way, it could drift a little bit further south here. However, be very careful with this upside support line drawn from the low the 1st of December, which also kind of almost coincides with the 100-day EMA here shown as the green line. I mean, it's sitting a little bit above that, but nevertheless, we could get an overshoot here. And in a way, then keep your eyes on the daily close, because if the daily close still ends up being above this upside line, then yep, maybe we'll consider that scenario of seeing a bit of a curved move back up here, if of course this whole area right here continues to provide support. So jumping into another index, and that's the dollar index, and here, for example, we have a bit of a messy kind of trading activity, I would say, because yesterday, or should I say on Friday or on Wednesday, we did get it pushed nicely above this 90.60 territory. That was great. We kept on trading above that level, above this hurdle yesterday as well, until but kind of before the end of the US session, kind of you can see that it drifted lower, and then today we're having a nice kind of climb back above this 90.60 territory. So it's a bit of a mess here right now, I would say. On one hand, when I was previously talking about this one, and I was saying that if we get a nice push above this 90.60 territory, then we'll aim a bit higher up until this downside line. So we got that. We didn't really quite reach this downside line, but well, I'll take that. And to be honest, right now, given how everything's kind of shaping up here a little bit, I will probably take a bit of a neutral stand on this one, because it's too close to this downside line, and this downside line, by the way, is drawn from the high of the 23rd of March. It's too close to that, so if you want to aim for some higher levels, we'll still need to wait for a break of this downside line and then kind of a push higher. And then even if then we get that break, probably the more comfortable level after a break of which we could aim for some higher levels could come on a break of the 91.75 territory right here, because at the same time the price would be placed above the 100-day EMA here shown as the green line. So again, I do understand we could be missing out on this little territory right here, but this barrier, the 91.75, is going to be the one to watch, because it previously acted as a fantastic area of support here back in September, the lowest point of September. And now it could take the role of resistance. So again, that's in terms of the upside. In terms of the downside, well, if this downside line continues to provide resistance, and so far, I mean, what we need to kind of consider here is the fact that kind of until it's broken, we cannot really talk about any upside. So as long as it remains intact, yep, so it's still kind of the trend is to the downside. However, for me, for the downside, I would need to see this one falling below this 89.96 territory, somewhere roughly around here, and then maybe we could go start looking at some lower areas, because as you can see previously, this hurdle here kind of did do its job and did provide good support. I mean, this area together with that psychological 90 zone. So yeah, you could keep an eye on that one. Now jumping into gold. Gold, I mean, from the start of this week, and actually last week as well, I mentioned the same thing, that as long as the downside line remains intact, there is still a chance for this one to drift lower. And in the beginning of this week, I was saying we were hanging around here in the beginning of this week, slightly below these EMAs, the 21-day and the 100-day EMA. And I was saying that, well, my next target is this 1819 level. I mean, although we didn't really quite reach that level, we came very close to it. Now we're kind of just balancing here in between these EMAs here and the 200-day EMA together with this 1819 level. So for now, basically, if you want to be a little bit more on the safe side, guys, I mean, you could wait this one out. You could, because it's kind of getting into a bit of a squeeze here, you could wait this one out, and let's say, for example, for the upside, wait at least for a break of this downside line and a pop above the 1875 territory in order to get a little bit more excited with the upside, because at the same time here the price would confirm a forthcoming higher high and more buyers could join in. Now, in terms of the downside, if you're a little bit careful, if you want to be a little bit more careful, then a drop below this, you could wait for a drop below this 1819 level and then kind of target some lower areas. Yeah, guys, I mean, for now, basically, to be able, if let's say being a bit more risky, I would say yes, I'm still targeting this 1819 zone, but yep, I mean, you definitely have to have a very, very careful stop loss, because just in case this, let's say, suddenly pushes back up here to test this downside line, and let's say it fails again to break it and then reverses to the downside. So basically, you were kind of right, but maybe it kind of stopped you out. So again, it depends on your risk tolerance. But still, the safer option here, it would be to wait for a violation of one of these levels here, the 1875 on the upside and the 1819 level on the downside, and then we could take it from there. Now jumping into WTI oil, this one is kind of moving sideways a little bit. However, this sideways activity ended up breaking this upside support line drawn from the low of the 2nd of November. Now we do have a bit of a mess here. So on one hand, we have a broken upside line, which of course means that the trend line, the trend is broken, and we could see a change in the trend. So yep, everything could lead towards the downside right now. However, we're still stuck in this little range here, roughly between the 59.53 territory and the 53.90 zone. We're stuck in this little area. For now, in a way, we need to kind of wait until we get out of this one, because so basically that's kind of the simple principle of range trading. So if you're not kind of capturing these swings here inside the range, then, well, I mean, you should probably be waiting just for a breakout. Though on the positive note here as well is the fact that we're still balancing above the 21-day EMA, which perfectly kind of coincides right now with the lower side of this little range. So in a way, I mean, there's a lot of confusion here for now, and to be honest, if you're trying to guess this one, I mean, well, definitely have a very, very tight stop loss, but personally, I would rather wait here and see what it wants to do after. If it breaks through the lower side here, then yep, lower levels could be met. We could start aiming for the 49.29 zone or even below that. Jumping into Litecoin very quickly here, guys. So Litecoin reversed to the upside, stayed above this 125.95 level here. I talked about this one, and now it kind of today, as you can see, this morning already, it tested the 21-day EMA. So together with this 138.17 level. So let's see if this area continues to provide resistance. I mean, don't get me wrong, even if it overshoots here, we still have this downside line which could hold up the price rise. This downside line is drawn from the high of the 10th of January, and then we'll take it from there, guys, because in a way, for now, still, I would say that as long as this downside line remains intact, there's still a chance for this one to drift lower. However, to be a little bit more maybe on the safer side, I would prefer to see another drop below this hurdle here, the 125.95 zone. And then I could go for maybe for a possible test of this 112.75 zone marked by the low of the 11th of January, which I believe is also the lowest point of January. That's correct. Yep. And then maybe even move further south towards this this upside line drawn from the low of the 20th of October. Again, for now, it's a little bit, like I said, it's a little bit of a tricky one. Now, on this one, I mean, it still could have a chance to move higher, and that's the reason why I have my kind of maybe short-term downside scenario from this level right here, this 125.95 zone, roughly around there. Because again, if I'll start kind of doing something right now with it, I mean, it could still push higher and maybe even actually decide to break this downside line. So just to be a little bit more on the safe side, guys, yep, we could wait for a drop below this 125.95 zone. Now, in case of the upside, now previously kind of I talked about this 147.13 level. Now we can slightly adjust it right here, put it here, capture this high, the high of the 25th of January, which is the current highest point of this week, and that area is roughly near the 147.96 zone. So a nice good pop above this area. Excuse me, guys. A nice good pop above this area could open the door maybe towards higher levels, because at the same time the downside line would be broken, and maybe more buyers could see this as a good opportunity to step in, and then we could start aiming for the 166.69 level or the 185.75 zone. Now jumping into a few pairs very quickly. So AUD USD. Okay, so yesterday we had a good drop. As you can see, we had a good move here below this this hurdle, this 0.7640 mark. I talked about this one, and but then we kind of traveled actually back to the upside and ended up kind of being, or actually testing, this 21-day EMA again. However, on the bear side, I would say that it failed to push and stay above this 21-day EMA. Instead, you can see that now we're having another decline here. So a little bit, a few levels need to be readjusted now. So of course, first of all, the one level that's going to remain the same is this one. So I'm still keeping an eye on the 0.7640 zone. I need that daily candle kind of staying below it in order to get a little bit more comfortable with, let's say, further declines. Now, in terms of the upside, previously I talked about this one, the 0.7669, but to be honest, I need to admit I got it a little bit wrong. Basically, what I'm going to stick to right now is not mainly this level here, the 0.7698 zone, which is roughly near the 0.77 mark. But actually, I'm going to stick to the 21-day EMA, because somehow that kind of continues to provide decent resistance and support. So yeah, again, for now it's a little bit of a tricky one, and let's say if we take a glance right now straight away, the first glance would be that yes, we're a little bit more bearish than bullish because we're trading below that 21-day EMA. However, in order to get a little bit more excited with the downside, as I said, I need that drop below the 0.7640 territory right here, and I would say I would need to get that daily candle kind of staying below this area, and in order to get a little bit more excited with, like I said, with lower areas. But if it pushes back above this 21-day EMA and climbs above that 0.77 territory, then, well, I mean, a push back towards this downside line could be possible. I can see in the chat room here Klaus saying thank you. You're welcome. I hope that helped. Mohammed Slim, good morning. So good morning to you. So yeah, guys, continuing with the charts here. So USDCAD, now this one is popping nicely to the upside. Again, we're seeing a nice break of this downside line. It seems that this is going to be something to watch maybe today. This downside line is drawn from the high of the 19th of March of 2020. I talked about this, and basically, well, what I said before, that yes, if we get break of this downside line, that's the first step for higher levels. However, in order to be a little bit more on the safe side, we would need to see a push above this 1.2957 territory. At the same time, the rate would be placed above the 100-day EMA and above this high, the high of the 21st of December here. In terms of the downside, well, continue monitoring this downside line. If it continues to provide resistance, then, well, maybe another slide here to the downside could be possible. However, now I will keep an eye on this hurdle, this 1.2793 level. I talked about this previously, and then I'll take it from there if we see a drop below it. Now, USD JPY. So we did get a lot of data today from Japan. Not bad, I would say, data, apart apart from the industrial production month-on-month figure. So yeah, I mean, unemployment rate came out much better, 2.9. The forecast was 3%. The Tokyo CPI came out at minus 0.4%, where the expectation was minus 0.6, so increased. So yep, in a way, here we can see that USD JPY is popping nicely to the upside. And in a way, I mean, with Japanese data, it kind of works a little bit the opposite way for the Japanese yen, with the Japanese yen. So tends to, when better news comes out, yep, we see kind of Japanese yen falling a little bit as well. I mean, due to its safe haven status. So, but nevertheless, guys, I mean, I talked a lot about this pair, the USD JPY. It finally is breaking above this 104.40 zone, and it's currently trading above it. So now, in a way, everything's kind of leading a little bit more towards the upside. Let's see if it can stay here today. If it's not going to reverse back below it, if it drops below it, I'll take a neutral stand. But I mean, or I should say cautiously bullish, I would say, because again, I would need to see that daily candle remaining above this 104.40 level in order to get a little bit more excited with the upside here. And my next target then is this 105.35 level here, which coincides with the 200-day EMA. A quick update on GBP NZD. I'm not going to spend too much time on this one because I'm kind of running out of time, to be honest. But GBP NZD, this idea that I've drawn previously here with this arrow, I mean, working out so far perfectly. What I said before, that in a way, if this pair struggles to overcome this downside line straight away, we could see a drift lower, test of this 21-day EMA, and well, if that provides good support, a nice push higher could be possible as well. So that's what we're getting right now. So everything for now, I'm going to stay bullish on this one, and we're going to continue targeting the upside. So let's see how this is going to play out. And it's not really the that much of a strength of the GBP, but it's actually more of a weakness of NZD. But again, that might change. Let's see how this is going to play out. For now, yeah, everything's looking quite positive here. But can we actually move towards this 1.9317 territory? Well, let's wait and see. Especially if the rate stays above this hurdle, this 1.9114 territory, somewhere around here, then, or let's put it this way, if it stays above this 1.91 territory, then yes, my next target is this 1.9317. And finally, EURUSD. So this one is drifting lower again. However, again, if you remember, if you watched my videos this week, I said to you guys that wait for a drop below this 1.2059 territory in order to get a little bit more excited with the downside. For the upside, I need to see a push above the 1.2190 level at least in order to get a little bit more comfortable with higher levels. So again, the same analysis remains, guys, as previous. So I'm going to stick to it and continue watching the price action here. So I'll take a bit of a cautious approach. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. Just a quick reminder that there won't be any Traders Tea Time today. We'll resume on a Monday with my Traders Espresso, 7 o'clock GMT time. For now, guys, I hope you have a wonderful trading day, wonderful weekend, and stay safe, guys. The most important, stay safe right now. So thank you very much, and bye-bye.